please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We're coming to the fag end of the earnings season. You may talk as much as you want about big banks like State Bank or, profitable banks like HDFC Bank or big companies like Maruti. Larsen & Toubro is a class of its own. It is the pulse of the Indian economy because it is the biggest capital goods company and really the one all-weather capital goods company. Come any downturn, Larsen & Toubro has held its own. So much depends on Larsen & Toubro, not just its own investors, but in general, economy watchers, market watchers would want to know how that company is doing. Results on Monday, and our expert Anisha is with us. Anisha, well, you have told me in this paper that about 12.5–13% revenues. If it does that, the stock runs. Is that in the price? If they fall short, will it be a big disappointment?
Well, no, actually, it won't be a big disappointment if they fall short. But talking about the top line first up, I'm looking at a 13% growth, which is around 42,000 odd crore rupees. Now, to meet their annual guidance, they need around 44,000 odd crore rupees. Now, in terms of the stock price, it has not factored everything up because if you look at the YTD performance, it is just up around 6%. But other than that, the valuation is a little bit stretched. So maybe the street would want the company to come out with a good set of numbers so that they continue giving it that valuations. But overall, over the last few weeks, Lata, if you remember, all the brokerages have turned very sanguine on the stock, especially on the balance sheet side, the improvement that we are seeing. So I think now the street has started looking to the balance sheet side versus the profit and loss. Okay, now there are too many things that you have told us. So it's my mistake. Sure. I should have gone one by one. First, the three numbers you will watch out for. Okay.
13% revenue growth. What else? So
13% revenue growth. I'm working with a margin expansion this time around. So I would look at a number of 12–12.5% there. And PAT will remain flat year on year. Remember, there was a one-time gain that we had seen last year of around 280 crores, and that's why the PAT would look optically flat.
Okay. So 13% higher would actually mean 41,500 crore. There are some numbers in the street with even 44,000, but as Anisha says, the market will be happy with 31,000, with 41,500. Yeah. Okay, the next thing people look out for is the order book, right? Now, what did they guide? What is the inspiring number? What is the disappointing number?
Okay, so they had earlier, initially at the beginning of the year, said that our order inflows will be up around 10–15%. Then they revised it and said it is going to be flat year on year. Now, to meet that guidance, they will have to come in with an order inflow of around 39–40,000 crores in this quarter itself. Now, they have announced close to 30,000 crores on the exchanges. And usually what happens with L&T is they announce around 60% of their order inflows. So, if you go by that calculation, they will meet their guidance and show a tad bit of improvement. And even if they miss that, Lata, it won't be too much of a negative surprise because if you look at Q1, in the last 15 days itself, the company has reported order inflow of over 16,000 crores. So the street will just say that maybe it just got pushed over to Q1, so not too much disappointment.
Okay, now let's come to balance sheet. How much, according to your calculation, has the debt come down? What will the street watch out for? Will they look out for some guidance of further non-core asset sale or debt reduction? Anything on those lines?
So, Lata, for L&T, long-term debt is not a problem. Their problem is the net working cycle management. Now, to begin the year with, the working capital cycle was around 19–20%. It improved to become to 21.5% in Q3. And that is what the street would watch out for, whether they're able to maintain that or not. Because in between, we had seen that GST blip come and the management was telling us that it would put pressure on working capital. That got abated. So, we are hoping that it will continue. And that's the thing that street is watching out for. Other than that, also one important thing to watch out is what they say about non-core assets. They've already liquidated their electromation and automation business. They have given away a few of their road assets to the InvIT. Another important thing to watch out for is what they say about Hyderabad Metro, because that can add a lot of losses to the company. So let's see how they really adjust for that.
That's the wild card.
Yes, that is something that can move the numbers here or there. So that is one thing we need to watch out for.
Okay. Well, I always enjoy L&T press conference. That company is in some way a microcosm of India, and therefore watch out on CNBC TV18. You will have Anisha reading out the fine print of the numbers and parsing it for you. You'll have the management addressing the press conference as well. So you may even write in your questions to us, and we will pose them. Anisha will pose them.
Definitely.
To the management. So join us on Monday.
Thank you.